And joining us right now is Ed Yardeni. He's president at Yardeni Research. Ed, we could start by talking about how the markets continue to kind of melt back up. We're near all-time highs.
Sure.
But I think the most interesting thing and what has kind of shocked and surprised me this morning is your move away from the big tech names in terms of being an overweight statement. What happened? For 15 years, you've been overweight on that sector.
Well,
what's changed?
Yeah, and it's worked. And so we've got to the point where information technology and communication services in the S&P 500 now account for 45% of the S&P 500. It's very concentrated market capitalization. And I think, if the Magnificent Seven are going to continue to succeed, then they're going to have to find sales among the S&P 493. I call them the impressive 493, in order to be used for increasing productivity. And I think that's what's...
Are those stocks overvalued, in your opinion?
Well, I think they are somewhat overvalued for sure, especially now that we're seeing that competition is coming in. It's turning into sort of a Game of Thrones with the Magnificent Seven. At the beginning of Game of Thrones, these things go up and down, and so the different thrones have various powers. And so I think that's what's happening with the Magnificent Seven. They used to just kind of operate in their own moats and kind of leave each other alone. But I think we're now having a competitive situation. Not only that, but I think we're going to find other startups that come and challenge some of their technologies.
I'm racking my brain. I don't remember everything that happened in Game of Thrones. I do remember the Red Wedding, though. Is that what we're setting up for with the Magnificent? Everybody died. You remember?
Yeah. No, I don't think everybody's going to die. I just think I think it's a healthy development. We need to see a broadening of the market, and the impressive 493, I think, are going to benefit from all these technologies.
So instead of betting on these names and thinking that they will continue to perform as they have to this point, you're telling people to invest in what instead?
Financials, industrials, and what's new for me also is healthcare. Yeah, healthcare has been kind of left kind of behind, but actually everybody thinks that IT is the biggest contributor to economic growth. It's actually the healthcare industries, especially as the baby boomers get older and rely more on the healthcare industry. So I think healthcare is another way to do it. And then you can also go overseas, because the U.S. now accounts for 65% of the market cap of the global MSCI or all-country world. And it's hard to imagine it's going to be much bigger. I mean, it does account for 55% of the earnings share on a global basis. But I think even this year we found that other countries have done better.
Healthcare being new for you, I mean, that's a pretty big deal, especially when you look at how people are trying to change the inflationary curve of healthcare. In Washington, there's a lot of plans underway. You're confident that no matter what happens, these companies will be more profitable than they are right now?
Well, I'm kind of betting that in line with this impressive 493, that all companies are becoming technology companies. You either make it or you use it. And I think more and more companies are using technology to increase productivity. And we've all had the experience of going to our healthcare providers or hospitals, and we know how backwards they are with regards to productivity. So there's tremendous potential, and I think we're seeing it. There's something called Epic, which kind of now allows hospitals to share your records, so you don't have to manually send them.
Company.
Yeah.
But those ideas will make these companies the beneficiaries. It's okay to just use this technology, not make it. And
correct.
That's where you'll get. Same story with industrials and with financials?
Absolutely.
What kind of pushback have you gotten to this point for shifting in this way? Because you don't do anything lightly, Ed.
It's a little early for the pushback on the call that it's time to reduce the overweight position that I've had on the technology and communication services. Again, it's been 15 years for me. The same thing with overweighting the U.S. I've been talking about that since 2010. And it's worked out, and at some point you have to kind of look and say, how concentrated are these markets going to be? Is the Magnificent Seven going to take everybody else out? There's going to be no market cap left for anybody else? I kind of doubt that.
What other things would you be telling people in more short term as we've got the FOMC meeting coming up?
Well, the Fed is coming. It's we've had the federal I call them the Federal Open Mouth Committee.
I like that. I like that.
Well, they've been saying for a while here that we should expect a rate cut, and so they got to deliver it. So we're going to get a rate cut. The only question is it going to be a dovish or a hawkish rate cut? In other words, what will be the language around it? And I think it's going to be somewhat hawkish. Certainly Powell's going to say that they've already cut by 150 basis points. Now they've cut by 175 basis points over the past year. But I think what's important to realize here is the bond market isn't exactly going along with the program.
Yeah, I was going to say the yields have actually gone up.
Yeah.
You're looking at the 10-year at 4.15.
I was against the Fed lowering interest rates last year, and they didn't listen to me. They went ahead and did 100 basis points, and what did the bond yield do? It went up 100 basis points.
Why do you think that? Is that because you think the cuts have already been baked in, and you're now going to start looking at more hawkish commentary that comes around this, or is this something else, something more sinister?
Well, I think the bond market is not fully convinced that it's mission accomplished for the Fed.
In terms of inflation.
And in terms of inflation. And then, of course, the bond market is a global entity, and global investors do look at yields in various parts of the world. And right now, we've got what looks like a pretty significant debt crisis developing in Japan, where their bond yields going up dramatically. Same thing in the United Kingdom. And I think basically the bond market is just trying to remind the government that, hey, you aren't doing anything about the deficit.
This is a really interesting moment, though, when you look at those yields climbing ahead of the FOMC potentially cutting rates, or at least the expectation that they'll cut rates. How does the Trump administration react to that? Because President Trump has said one thing he wants is the Fed to lower rates so that people can get lower mortgage rates and get lower, cheaper car loans on all of those things. And that's not going to happen if the market defies.
It's not playing out because, the Fed and the administration is focusing on the Fed funds rate.
Yeah.
And they've even got this cockamamie idea that there's some sort of neutral Fed funds rate, and it's probably around 3%, and so we're still kind of restrictive. And so they've been lowering rates, and that's been offset by the increase in the bond yield. I think you have to look at the entire yield curve, and the yield curve is saying, we still haven't gotten to 2% inflation. And, oh, by the way, the deficit is it's humongous, and it's only going to get even bigger as we look next year.
10 year's been very well behaved with all the negative things that you're saying, with the $38 trillion and with inflation still 50% above where it should be. 415 is not. That's not a spike.
No, it's not. It's not. But I think
it's not going the way they want.
It's 15 points away from 3.
But you think back to what.
That's a good point. I mean,
you think back to what James Carville said.
I just don't think you're seeing.
He wanted to come back and his next step is the bond market so he could intimidate everybody.
Right. But the excrement has not hit the air conditioner.
Early on, the administration was saying that they were focusing on the bond market.
Yeah.
And it's not working for them.